This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices held near three-week highs on Thursday after OPEC Plus agreed to tighten global crude supply with a deal to cut production targets by 2 million barrels per day, BPD, the largest reduction since 2020. Brent crude futures gained 15 cents, or 0.2%, to $93.52 per barrel by 1340 GMT after settling 1.7% up in the previous session. U.S. West Texas Intermediate, WTI, crude futures rose 14 cents, or 0.2%, to $87.90 after closing 1.4% up on Wednesday.
Global oil supply is set to tighten, intensifying concerns over soaring inflation after the OPEC Plus group of nations announced its largest supply cut since 2020 ahead of European Union embargoes on Russian energy. The move has widened a diplomatic rift between the Saudi-backed bloc and Western nations, which worry higher energy prices will hurt the fragile global economy and hinder efforts to deprive Moscow of oil revenue following Russia's invasion of Ukraine. Global crude futures jumped this week, returning to three-week highs, after the Organization of the Petroleum Exporting Countries and their allies, including Russia, on Wednesday agreed to slash output by 2 million barrels per day just ahead of peak winter season.
Moving on to the top news in the energy sector.
The European Parliament will turn off heating in its buildings for 3 days per week and adjust its thermostats for other days in a drive to save energy. The move comes as European Union countries including France and Germany have rolled out energy savings measures of their own as they try to avert power or gas shortages during winter. The European Parliament will switch off heating or cooling of its buildings from Thursday evening until Monday morning, and during holiday periods, according to an internal email from Parliament's Environmental Management Service seen by Reuters.
Energy demand in Southeast Asia countries could triple by 2050 and the region could become net importer of natural gas and coal before that if the region do not develop alternative sources of energy, a study by the region's energy sector body found. For the 10-Nation Group Association of Southeast Asian Nations, ASEAN, diversification of energy sources would be crucial, not only due to efforts to cut emissions, but also to meet rising energy demand. Nuki Agya Utama, Executive Director of ASEAN Center for Energy, ACE, said on Thursday. The demand is increasing. In line with that we need to provide stable supply, which would become a problem if the supply relies on one or two sources, he said in an interview. Next, we have the top news in metal markets. Russia is considering building a plant to make alumina, used in aluminium production, to reduce its reliance on imports from China, which has risen since the start of the Russia-Ukraine conflict, a document seen by Reuters showed. One of the world's largest aluminium producers, Russia secures 65% of its need for the intermediate product alumina through imports, mostly from China. A draft of the plan for development of Russia's metals industry until 2030 said. Russia's increased dependence on China's alumina has driven up the production costs of aluminium and follows disruption of supplies from Ukraine and Australia since February 24, when Moscow sent troops to Ukraine.
The London Metal Exchange, LME, has restricted new copper and zinc deliveries from Russia's Ural Mining and Metallurgical County, UMMC, and a subsidiary following Britain's sanctioning of its controlling shareholder, Iskander Makhmudov. The British government last month announced a new package of sanctions linked to what it described as Russia's sham referendums in 4 regions of eastern Ukraine. Russian President Vladimir Putin signed a law to incorporate the 4 partially occupied regions into Russia on Wednesday. Kyiv called the act a collective madhouse at a time when Russia's forces have been fleeing from front lines.
We will now look at the top news in the agricultural sector.
Ukraine's winter grain sowing area for the 2023 harvest will unlikely to exceed 2 million hectares and the harvest could fall by at least 50%, the head of a large Ukrainian agriculture company was quoted as saying on Thursday. The pace of sowing winter wheat in Ukraine for the 2023 harvest is 3 times lower than last year, according to data provided by the Agriculture Ministry this week. Farms have sown 1.1 million hectares of winter wheat as of October 3, or 27% of the expected area, compared with 3.1 million hectares sown at the same date in 2021, the data showed. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.